Has this crypto cycle messed with your head? This cycle has confused a lot of people. For some, it's felt like a real bull run. For others, it's still a brutal bear market that just won't end. So what's going on? Well, here's the real issue. Crypto doesn't move as one market anymore. It runs on multiple regimes at once. And if you don't know which one your asset is in, you're playing the wrong game. So today I'm going to share a simple framework to cut through this confusion and help you see what's really happening so you can make smarter portfolio decisions. Welcome to Sovereign Stash. I'm Anna, ex-product manager turned full-time crypto investor. I started this channel to share the crypto portfolio strategies I'm using myself, and I share my mistakes too. So if that's helpful to you, hit like and subscribe. In this video, you'll learn three things. First, a simple method for diagnosing the market's true structural health so you're not misled by Bitcoin's price alone. Second, the two playbooks that solve the bull-bear trap. And third, a simple 90-day reset we can all use to avoid overstaying our welcome in a position. As always, this is not financial or investment advice. It's just a look at how I'm navigating the market myself. Now let's get into it. Calling this a simple bull market run misses the point. It's something else entirely, and figuring it out will change the way you invest. The first step to gaining clarity is to stop thinking of the crypto market as one single thing. Right now, we're in what I would call a K-shaped market, meaning different parts of the market are moving in completely different directions. This means one set of assets is in a pretty healthy uptrend, forming the upper arm of the K. That's Bitcoin and a few select altcoin leaders, while another set of assets is in a structural downtrend, forming the lower arm of the K. That's the majority of altcoins. What makes this cycle different is that the upper arm of the K is now being structurally supported by institutional capital, while the lower arm is still almost entirely driven by retail. And retail isn't as rich as institutions. Some call this the Great Altcoin Reckoning, where projects are sliding down toward their much lower, more realistic valuations. So you could say we're living through the Great Split. Bitcoin as the apex asset can be in a slow grinding bull run or macro accumulation phase, while many altcoins are stuck in a painful, multi-year structural bear market against it. Now here's the bigger truth. Crypto as an asset class is still in a long-term secular uptrend. But if the altcoin side of that class is still bleeding out, you have to ask, where's the real strength actually coming from? And don't you want to be in that? And the answer is clear. It's Bitcoin predominantly that's carrying the weight, and a handful of other strong leaders that help. Which means for most altcoins, those sharp volatility spikes we've been seeing along the way, when we think we're having an altcoin run, or indeed having a mini altcoin season, don't necessarily change their longer term trend. Now, I'm not saying every altcoin dies or that we won't have another altcoin season like the past, but likely many altcoins are still unwinding excess 2021 hype, believe it or not, 4 years later. And only a few of them will ultimately, in the long term, prove themselves to show any ongoing strength relative to the king, Bitcoin. Now, on the screen now, you can see a chart of Bitcoin holding strong above its key long-term averages. It looks healthy overall. But that's only half the picture. To see the real health of the altcoin market, we can't look at generic charts like totals here on TradingView that's distorted by Bitcoin's strength and stablecoins. Total 2 and Total 3, although they exclude Bitcoin and Ethereum, they still include stablecoins. Instead, we need to look at the ratio of the altcoin market cap relative to Bitcoin itself without stablecoins. So this chart compares the size of the altcoins directly against Bitcoin without stablecoins or the largest altcoin, which is ETH. And as you can see from this chart, it's telling a very different, much weaker reality for alts. The first step for any portfolio strategist is to see this split, to identify the leader versus the laggards. This tells you which game you're actually playing. The K-shape we're seeing is dispersion. What does that mean? Well, when a market has high dispersion, it means there's a wide spread in asset performance inside the same market. So some leading assets trend up strongly, performing well, while many laggards drift down or remain flat. That means asset selection is critical. You must own the right crypto. Now that you can see the two different markets playing out, let's get into the playbooks you need to navigate them. Once you see the great split, stop trying to use one strategy for everything. I run two playbooks: my core holdings playbook, so this is Bitcoin predominantly, and a handful of top assets I'd say are on probation for my core. I have real conviction in my core, and these attract institutional capital. Conviction isn't a feeling, by the way, it comes from deep research, my documented written thesis, and a long term view. And the goal for the core is durable exposure to the market, steady accumulation over time, and only rethinking if that thesis actually breaks. Then there's my altcoin playbook. So everything outside the core lives here, split by role. For my growth bucket, I add more slowly. I buy more when there's fear in the market and I stay patient. I care less about short term price moves and more about the project's progress towards more real users, more real use cases, and real revenue. But I'll set up a time frame for which I will set price performance expectations compared to competitors and compared to the narrative leader. If nothing much progresses on either user adoption or price performance over that time frame, I'll reassess it. And for my moonshots, I keep sizes tiny such that if I lost the lot, I wouldn't panic. With a few exceptions, they need to perform within about 30 to 90 days, or I'll recycle the capital. This prevents me from holding on too long to something that hasn't captured the attention I was anticipating it would. But I do have a couple of moonshots I'm just holding, probably for years. Because, like I said, if I lose the whole position, it's so small it doesn't matter. But if they take off, it's free money. So, because in crypto dispersion is high, one playbook can't do everything. Having a core based on Bitcoin gives my portfolio endurance and exposure to the institutional capital flows. Growth and moonshots must earn their place. This is how I try to keep building my stack on the upper K arm, and I manage carefully the exposure I might have on the lower K arm. And it's up to you to determine what timeline is important to you for this game. Now, seeing these playbooks this way may be a lot to take in if you're just getting your foundations sorted in crypto. If that's you, I have a free 5-day email course called Crypto Survival 101. It's beginner friendly and gives you ideas on how to structure a smarter portfolio. It's not financial advice, but it is some of the key tactics I use. I've linked it for you in the description. Now, even the perfect playbook can trap you if you hold on too long. That's why you need one final discipline to stay ahead of the game. A big mistake is falling in love with assets. Fall in love with people or pets, not assets. Crypto moves fast, leadership rotates, narratives fade. So I use a calendar based review to stay objective. Here's how I review: does each asset still match its role, core, growth, or moonshot? Is the original reason to own it still true? What changed? Has a new competitor emerged? Did the project move forward since the last review, or has it stalled? So, for example, has usage of the network increased or decreased since my last review? And finally, is my sizing still appropriate given what's leading and what's lagging in each category? There's some great projects I watch that just aren't showing increased adoption, and just following the price chart won't show you this insight. I also use my two altcoin decay tests: the gold standard, which is a strength test against Bitcoin, and the narrative leader test. If you don't know what I'm talking about, I cover those in my video before this one. It's called Altcoin Decay: Two Charts That Decide Your Portfolio. You should check it out if you haven't already, because it's aimed at helping you determine which altcoins to hold. Now, lately, attention has clustered in a few buckets. We had an institutional interest narrative, which resulted in an ETH mini season. Then we've got crypto projects that have real revenue and buybacks tokenomics. They've had a lot of strength. Perpetual decentralized exchanges attracted a ton of capital flows and a lot of hype. And we saw digital asset treasury vehicles and stablecoin narrative continue to cycle interest to the traditional financial markets as well. The key isn't to chase these narratives blindly. The key is to see which of your existing assets in your growth or moonshot buckets are capturing this new attention, and then decide if your thesis and sizing are still correct. High dispersion markets reward the leader selection and sizing. So I note where the attention is, but then I still make decisions based on that particular asset's role in my portfolio, my own thesis for it. It's real fundamental progress, not just its current hype, and what sizing makes sense for me. If an asset can't clearly answer those review questions earlier, it doesn't earn a bigger position for me. If it keeps answering them well, it can. Simple as that. So, always having a clear thesis in the first place helps me navigate these hot narratives without succumbing to FOMO and hype, because you'll get wrecked if you succumb. So, this 90-day review process might be a lot for people who aren't as nerdy as me, which is why I've turned my personal template into a free sheet. This one's called the Sovereign Stash Thesis Tracker. So, it'll just walk you through these exact questions so you can stop making emotional decisions and start managing your portfolio more like a pro. And I've added a simple AI prompt to help you write a thesis and invalidation criteria if you've found that hard. I've put a link to it in the description below. If you've got real money in this market, you need a structured process. Stop winging it like most people, or you'll get wrecked, or you'll underperform. If this video has helped you and you haven't already, I'd really appreciate it if you hit that like button and make sure you're subscribed. So let's bring it all home. Stop asking bull or bear. Don't be confused. Start asking, what role does this asset play in my portfolio? Get that right, then apply the right playbook. And instead of struggling through this cycle, you'll understand the game you're actually in. Now that you have a framework for navigating the market, the next step is to assess the real strength of your current altcoin holdings. To help you with that, go watch this video next. That will help you in detail. And if you want to go deeper on your crypto journey, I've also linked some of the most useful crypto resources I've found in the description. Some are affiliate links which will support the channel. Now, if you want even more detail on my exit strategy, I made a video about that called How I Sell My Altcoins for Real Gains. I've linked these two videos right here on the screen. Thanks for watching. I'll see you in the next one.